All right, good morning, everybody. It's 6:33 on Wall Street. Time to get your global macro on. It's about 3 hours before the opening of trading for a brand new week. So anyways, let's uncover the best fundamental opportunities. Well, Wayne, how do we do that? Well, let's use AI to analyze sentiment, inflation, employment, GDP, technical trends, open trade positioning of institutional and retail traders. Look at seasonality and a whole bunch more. And we'll discern risk on or risk off. Yeah. And then from there, we have direction. So if it's risk off, maybe the S&P 500 is down. Okay. The big thing today that we need to do as a community is we need to go through the Commitment of Traders report. That information was updated on Friday. You're like, Wayne, how do I figure out risk on or risk off? QuantBox does that for you. It looks at VIX, which is volatility. It looks at yields. It looks at the dollar. It looks at the yen. It looks at gold. It looks at the S&P 500 on 3 different time frames in real time. And then gives you things to like, hey, maybe you should be bullish on Aussie and bearish on yen. Oh, cool. Nice. So if you're watching this on YouTube, I don't know, it's several hours late. Half the time I forget to upload to YouTube at all. So if you like what we're doing, why don't you kick down, come clean, and don't be a holdout machine? Why don't you join? Huh? Got no money, you got no car, you got no woman, and there you are. Come on, join QuantBox. You know you want it. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Looks like I have to log in, so I will log in. Boo, boo, boo. Nice! Isn't it pretty? Oh, hey, YouTubers. Guess what? Yeah, it comes with training courses, statistical analysis, and macroeconomics. Very cool. Only 16 hours, though. Not bad for an $8 trial. You can join our live sessions by clicking in here, but let's just get into the Pro. Now, you have to use the, you remember that Gmail I logged in with? Yeah, so I'm logged into QuantBox with the proper Gmail, but my browser's not associated with the right one. So I got to switch over and log me in. Now I'm logging into the Google Cloud. The Google Cloud. Cool. They're good, Jesse. Thank you. One has been under the couch for 3 days, and the other one walks all over the furniture. Yeah, king of the world. I'm sorry. No, that's what you want. You want 2 personalities. Anyways, on with it. Okay, life is great. Life is good. Life is beautiful. And if you're not sure how to tell, look at the yield on the 10-year T-note. It tells you everything. Okay, 4.23, 4.25. In our world, that is beautiful. Thank you. Thank you. It's a nice move. So that means money is going into treasuries, which is an important part of the process of flow of capital. If money wasn't going towards treasuries, countries couldn't fund themselves, in particular ones running deficits like, well, America. So anyways, so it's functioning well. It's money is going in. When it was at 5.0, it was a dysfunctional market and it was scary as all can be. So anyways, this is right as rain. It's good. Be interesting to see when we finally get to 4.0, if it's anytime soon, but we're on our way there. So anyways, that's good. That makes me feel good. Oil is way down, way down. It's an interesting volatile market. Holy smokes. One day you're up $5 and the next day you're back at break even. Wowzer. I think our number was closer to 72 and a half for support. So this could be a very interesting week for oil. Put that on your radar. Okay, gold had a massive spike on geopolitical risk. We did more on Sunday open. You know, for some people, they're just logging in now, like you just starting their week. No. The week started yesterday. Anyway, so gold opened big and already hit massive targets. And that had to do with the geopolitical risk. Okay. Apparently, our brave terrorists attacked unarmed boats. You're like, And so S&P 500 has been pushing higher. NASDAQ has not been pushing higher, and Dow has been making higher highs. So it's interesting. I talked about it yesterday in the day trading group that meets on Sunday, and it has to do with portfolio rotation. So so maybe S&P 500 goes up a little bit this week. Maybe NASDAQ falls a little bit this week. Maybe Dow actually goes up, which is the strangest correlation if you think it's just, well, if it's just trading. The issue is it's not trading, it's portfolio management. So you're going to see probably strange correlations. Okay. Euro dollar was at 110. Now we're below 109. We'll keep our eyes on that. Euro got very weak. Okay. Very weak. And then Bitcoin. Holy smokes. Okay. And that's my way of describing big move up. Okay. If we look at the stock markets around the world, you see the nice correlation. Okay. That's how the markets move. Okay. They're all moving in step and at different rates of change. And this has to do with how attractive those economies are. So right now, the UK is back above break even. Yay, good job. Meanwhile, look at the Japanese stock market. Yeah, that's a 40. That's a 40%. Wow. Okay, makes your Nazi stupid, huh? Yeah, amazing, huh? Wow. Well, maybe that's coming to an end. We'll take a look. Okay. Cool. So let's zip over. I'll skip no, we'll do the risk gauges. Why not? Okay. Nothing really has changed. We're waiting. We're waiting. And again, tops might be forming due to year end. Okay. Bitcoin, holy smokes, huh? That's all I can say. Holy smokes. Okay. Let's get rid of that so we can make more sense of our scatter plot. Okay. And what do you see here? What you're trying to do is find a trend. And looks like that, which means not risk on, not risk off. Nothing's happening quite yet. But what is happening is the stock markets are up. Okay. Except for Japan. Well, maybe a top is forming. Also, yen is strong, yen is strong, yen is strong, yen is strong. UK stock market's weak, but as I just showed you, it's the ugliest of the seven sisters. And then when you look at NASDAQ has moved the highest and now is the first to be hit with profit taking, which might be why Dow is up. And I explained this last night. Now it's reality. Okay, now to the big moment. Yeah. Let's get ready to rumble. Yeah. All right. Still the king of the markets, right? Institutional investors are heavily long the Japanese stock market, heavily long USD, heavily long gold, heavily long oil, all the way down. Very, very short CAD and Swissy. Now, being short Swissy is a risk on. Okay. Yeah, not dollar though. So it's kind of interesting. Very, very short yen. Okay. Very short Aussie. Okay, great. And much of this has existed for quite some time. So these are long-term trends. This is the stock of positions. Okay. Many more, let's say with Canadian dollar, very few bulls and a significant amount of bears. In fact, 81.38% bears. But what we want to also pay attention to, so, well, let's do a quick one on this. You could consider, for example, maybe now, and I'll show you how to revise this, but in general, you could think of like Euro Swissy long. Okay. You could think Euro CAD long. You could think Euro yen long, right? You get the pattern. You could think Euro Aussie long. Now, where the reason I say think is now you take that. And by the way, this is the way I used to trade 20 years ago. It literally would do this math. Um, well, I did overnight volatility, but nonetheless, I did similar math to do most bullish and most bearish. Okay. And then I would go to my chart. So I'd create my list. So Euro, Swissy, maybe long, CAD, maybe long, yen, maybe long, JPY. Okay. And Euro Aussie, maybe long, maybe long, maybe long, maybe. And then I go to those charts and I see, do I have bullish setups? Do I have reversals to the upside? Do I have higher lows? You don't just do it. Okay. Now, these are long term positions. This is you being kind of like, you're letting your inner George Soros free. Okay. Now, what about this week? What about shorter term than that? Okay. Then you have to look at not just the stock of positions, think of them as futures contracts. Why? Because they are futures contracts. And you get an exact number. How many are long, how many short? So it's a stock, it's a number, it's an inventory of longs and shorts. Okay? But what we want to do on a shorter term basis is look at the flow, the cash flow. Money, right? Significant new money went into the Great British Pound this week. Oh, so it may not be terribly bullish, but it's a heck of a lot bullish than it was before. Okay. Is that right, Denise? Are you saying that didn't update? Yeah. Okay. Thank you. This is the best part of what we're doing, anyways, right? Thank you. Okay. Money is right flowing into the Great British Pound. Money went into the Dow, and we see that. And again, what's happening is a rotation out of high beta, high vol growth stocks into low beta, low vol value stocks. And it has to do with rebalancing. And some money went into gold. Boy, did they do well this week. Okay. So on and so forth. Now you can update this. Boy, isn't it nice to have a database you can manipulate? Money is coming out of the dollar. Money is coming out of the yen. Money is coming out of oil. Hey, pretty big change, huh? Okay. I mean, think about this, like just with oil, we have 1,600 new bulls and almost 26,000 new bears. Bears, 26,000 bears. Whoa, new bears. Whoa. Amazing, huh? It's still bullish, but every day it's becoming a little more bearish again. Now, because investors are still heavily long. So where did my oil go? Okay, you can still see 67% long. Oh, I see. Yeah, and this is not updating. Good. Yeah, you're right. Thank you. Yeah. You can see 67% of the market, two-thirds are still long. 1/3 is short. So maybe at some point, like you can see, like the market is still bullish, but it's a lot more bearish than it was. And then you open up your chart and you see prices are way down, but people are still heavily long. Maybe you look to buy a dip. You see, it's not like it's bearish long term and bearish this week. It's bullish long term and bearish this week. So you could use it that way and say, well, maybe we want to get long oily. Okay. So let's pull up the my WTI. There's the big spike on gold I was talking about earlier, just to observe it. Now we're back in a price in which you could consider, if you wanted to, buying. Okay, there's the trap and break from last week that I drew. Okay, so you could, if you wanted to, if you're going to use technical analysis, okay, it's plausible in this zone here. It's plausible to get long again. All right, but I don't want to talk about that. That's just geopolitical risk volatility. What I want to talk about is more of this trend. And I drew this out yesterday for the day trading group. And look at that. All right. So 67% of this market is long. And prices down and potentially stabilizing, right? So plan A is this way. If you're a bull, you have permission to buy double bottoms. You're allowed to buy double bottoms and higher highs. The other way to play it, okay, is let the bottom hold, have it come up. It's going to test this area. And then you buy the higher low. And off we go well, if you're going to use technical analysis, the target's there. If you're going to use fundamental, it could go up forever. So if you are part of the 67% that are bullish, this is an opportunity. And then the higher low is an opportunity, because bulls are allowed to buy double bottoms and higher lows. So this could be the next couple of days for you. You're trading this way. If you are a bull, if you agree with the bulls. Now, a breach lower is just straight up scary. Okay. Because where's the floor? 66. Okay, 66, which is nowhere near where we are now. Okay. So anyways, be careful, be careful, be careful, be careful, be careful. Be careful, be careful. So maybe an opportunity long or step aside if you're a bull. Okay, right? So play it the best you can. I would, right? I already have it marked. Cool. Neat, right? Now we played around with some ideas, maybe euro, maybe euro, maybe euro, maybe euro, based on some of those positions. But what I want to show you is euro has been horribly bearish the last little bit. Holy smokes! Where okay? Holy smokes! Holy smokes! But perhaps if you believe in the general market sort of positioning of institutional investors, you could say maybe this price holds. Okay. Maybe it holds. But euro is super weak. It has been. Doesn't mean it will be next. It has been. So if you are going to use QuantBox to make longer term decisions, you could say it might become bullish again because the market is generally positioned bullishly, but it's not bullish now. Okay, don't QuantBox is not going to predict the future for you. It's not a genie in a bottle. If it could predict the future, it'd be $1 million a month subscription fee. And that would be a deal. Okay. What it does is quantitative analysis of economic data. It tells you exactly what is happening, but it doesn't tell you the future. That you still have to be the one to make the decision. And you can say, maybe maybe this holds. Maybe euro pound doesn't go further, but then you step aside and say, ooh, but money's flowing into the pound. Okay, so you want to avoid that. Nice. Again, you're making decisions on the quantitative analysis of week over week cash flows of the commitment of traders report. It's not how do you do the double negative? I can't. It's not useless information. I don't know. Sorry. I'm not good with double negatives. I try, man. I try. Um, all right, but maybe EuroCAD was one of them, right? Maybe this one stabilizes. So then you use your technical analysis. So how do you put that together? Well, maybe we get something like this this week, somewhere this week. Maybe it's already begun today. You wouldn't do that on a 4-hour. Okay. And you would have said, okay, if I'm going to use a monthly position trade strategy straight out of Investor Bootcamp, then you can say it's a little scary because this asset class is collapsed in price, but you believe it could turn bullish again because of longer term positions, not just what just happened the last couple of days, but you're like, institutional investors have spent months building positions. Okay. So if you were a bull using position trade strategy out of the swing trading group, this is the best price you could hope for. Now it's a falling knife. Oh, for show. So how do you tiptoe into that, you know, into the minefield? Well, at some point, you're looking to buy little dips and you're okay. It'll probably double bottom before it goes up. But the thing is, you know that you can look for a maybe up. And that's the whole point. Now you're thinking about later today, tomorrow, later this week, maybe even next week. QuantBox is helping you set things up in advance, not just reacting to what happened 4 hours ago. Okay. Yeah, it fell for 3 days. Are you going to buy it? Why would you be interested in buying it? Institutions are interested in buying it, and I follow the institutions. So if this starts going up, I know institutions are likely to be buying it. A retail trader wouldn't buy that because they look backwards only and go down forever. And you're looking forward and saying, well, I know the institutional positioning on this. Okay. And maybe it becomes up. So in the next few hours or a couple of days, if, again, remember, it's an if then, if this happens, then you believe it could be institutions buying back their old positions that they took profit on up here. You also know if they're buying at that monthly M2, you also know the target is up there, 150, 133. And that, my friend, we call a trade plan. It's combining technical and fundamental analysis. Lots of news this week. Lots of news. Aussie jobs are coming. Then we have JOLTS. Then we have ADP. We have NFP. We have a CAD interest rate decision, right? The Australian interest rate decision. We have the Canadian jobs report on Friday, as well as our non-farm payrolls. Holy smokes, holy smokes, holy smokes, holy smokes. So today, watch Aussie. Sort of tomorrow-ish, and then Thursday-ish, start watching CAD. Dollar's going to be focused on quite a bit. I would watch the rotation of money out of NASDAQ and into Dow. We are in the blackout period for Fed speakers, so there's no more speeches. Okay. Cool. So it's going to be an interesting week. There's a lot. And it's like interest rate decisions and then jobs. Just lots of focus on jobs. Okay. Well, yeah, the 2% inflation target's not going to change. It's never going to change. It's always been 2%. When I first started, that was a new concept of inflation targeting. I have a book on inflation targeting written by Ben Bernanke. So the target is the target, and it always will. Always has been, always will. So that's no new news. Yeah. The big news, of course, and I've highlighted it several times, but so I won't do it again. But you have to look at headline inflation, or whatever your measure of inflation is, and the Fed funds rate. And the Fed funds rate is significantly higher than whatever your measure of inflation is. Okay, the Fed funds rate is very significantly higher than what the market is trying to price in, or has. Remember, has. November was a massive month. They've already made their moves. They positioned that because of that, the Fed will have to cut, just because it's too restrictive. They got to get it closer to a normal level where the Fed funds rate is just slightly higher than inflation, or even just slightly lower than inflation if you want to promote growth. But it's too high. So they're cutting in, they're pricing in these cuts. But that's already been done. So we had a monster November. We could have sort of a mediocre December and a profit taking in between. So whatever. That's why we do this every day. So we're here. Peace on earth. May the pips be with you. May our profits be above average. We'll see you when I see you. Looking forward to another great week.